Hello, and welcome to this Thursday edition of CMS Forex News. I'm market analyst Nick Nassad. Today is September 18, 2008. Japan's Tertiary Industry Activity Index showed increased activity in the services sector in July. This comes after 2 months of declines. A second release, the monthly Bank of Japan Monetary Policy Report, showed that the central bank is expecting a more pronounced slowdown as commodity prices are restraining business investments and hurting corporate profits. In the UK, retail sales showed a strong gain of 1.2% in August after an upwardly revised 0.9% gain in July, mainly driven by a surge in textiles and footwear sales. The figures on the year jumped from 2.1% to an annual pace of 3.3%, twice the projected number. Despite being a bright spot in a line of weak fundamentals, UK retail activity still remains pressured, according to the British Retail Consortium, which showed retail activity down 1% on the year in August. The public sector in the UK borrowed $10.4 billion in August, more than forecast. Government spending has increased partially due to the takeover of Northern Rock earlier in the year, which increased the weight of net debt to GDP from 36.4% to 43.3%. The pound-dollar pair hit a low near 1.81 prior to the retail sales data, but climbed back slightly prior to and following the release. After rising and testing the 1.825 level several times today, the pair fell back below 1.82 in afternoon New York trading. A very interesting development is the announcement that British financial regulators cited extreme conditions in banning short-term positions on financial shares till January. The Swiss National Bank left the benchmark interest rate at 2.75%, still saying that inflation calls for the bank's vigilance. It also mentioned that it was concerned with the more pronounced slowdown in the economy and the recent market turmoil, but did not propose any action soon regarding interest rates. The Euro-Swiss franc pair declined in the wake of the interest rate statement, falling to test 1.5770. The Swiss central bank may be less inclined to lower rates as inflation in the short to medium term remains high and the bank needs to stay vigilant to its dangers. In the U.S., there were 455,000 new claims for jobless claims and has been above 400,000 since mid-July. The high jobless claims data in the week ending September 13th was partially due to the first wave of unemployment claims stemming from Hurricane Gustav in Louisiana. The Conference Board composite of leading indicators declined for the third month in a row in August, down 0.5%. 4 of the 10 indicators improved while the rest declined. The coincident index came in at 0.1%. The U.S. Philly Fed Manufacturing Index was stronger than expected. Their overall index improved to 3.8 for the September period, jumping from August's negative 12.7. Prices paid and received both moderated, while the employment sub-index was the only one that did not have impressive improvements. Another important development following this tumultuous week was an injection of billions of dollars into the financial system by the world's biggest central banks to try and soothe distressed money markets, which coincided with the European Open. The euro-dollar rose to test 1.4535 in European trading after a strong 200 pip move in the wake of the announcement about the coordinated move by central banks. At the New York Open, however, the dollar regained its footing and paired some of its earlier losses. Still, the pair seems to be heading in the euro's favor since hitting 1.39 6 sessions ago. U.S. stocks were positive today, with the Dow Jones climbing as much as 350 points after being down parts of the day. AIG was removed from the Dow Index and replaced by Kraft. Investors weighed whether the move by the Fed will help to ease the flow of credit. The dollar-yen pair hit a low at the 104 level around 1 p.m. when stocks were negative, but rebounded along with the U.S. stock market. In Canada, wholesale sales improved in July, reflecting resilience in demand. The Canadian economy is faring relatively better than the rest of the developed nations, not succumbing entirely to the neighboring economic slowdown. Canada's leading indicator grew 0.3% in July after an upwardly revised 0.1% growth in June. The US dollar-Canadian dollar pair fell lower overnight, testing below 1.06, but rebounded in New York trading. It's interesting to note that the price of this pair has been returning to the 1.07 level around 2 p.m. the last 4 sessions as we face ranging conditions. Overnight, the fundamental docket is very light, with the only major release being German Producer Price Index. And that wraps up today's edition of our broadcast. Thank you for joining us, and come back tomorrow as we wrap up the week right here at cmsfx.com.